What if a single financial decision could change the course of your life? What if a teenager, armed with nothing but curiosity and a modest investment, could outmaneuver seasoned investors and build a fortune? This is the true story of Erik Finman, a young man who mastered budgeting, investing, and strategic risk-taking to become one of the youngest Bitcoin millionaires. Stick around because by the end, you'll discover the mindset shifts that could redefine your financial future. Chapter 1. A Small Town, a Big Dream. Growing up in a quiet town, Erik Finman wasn't handed wealth or privilege. Instead, he faced an uphill battle against a system that didn't recognize his potential. He struggled in school, uninspired by traditional education, and was even told that his future held little more than a minimum wage job. But where others saw limits, Erik saw an opportunity to take control of his financial destiny. Most kids grow up following the rules, assuming that success comes from good grades, college, and a steady job. Erik questioned this narrative. He realized that if he wanted to achieve financial freedom, he had to take a different path. It wasn't about rejecting education, but about understanding where real learning happens, through experience, risk-taking, and seizing opportunities. Chapter 2. Discovering Bitcoin, a $10 opportunity. Then, in 2011, at just 12 years old, he stumbled upon something revolutionary: Bitcoin. At the time, most people dismissed it as a passing trend. But Erik wasn't like most people. He saw beyond the skepticism and understood one of the most crucial investing principles. Early adoption creates opportunity. With Bitcoin trading under $10, he recognized a chance to turn a small amount of money into something much bigger. Bitcoin wasn't mainstream yet. It was just a concept discussed in niche online forums. Erik dove deep into research, understanding its potential. He saw it as more than digital money. It was a decentralized revolution, an entirely new financial system, and he wanted in. Chapter 3. The Boldest Budgeting Decision. Erik had a choice. He could hold on to the $1,000 his grandmother had saved for his education, or he could invest it in something unconventional. He made a bold decision. He put every cent into Bitcoin. This wasn't luck. It was a budgeting decision rooted in conviction. Instead of spending on temporary wants, he prioritized an asset he believed had future value. Investing everything in Bitcoin wasn't a gamble. It was a calculated risk. He understood that wealth isn't built by playing it safe. It's built by making informed, strategic decisions. While his peers were buying video games and clothes, he was setting himself up for something far bigger. Chapter 4. Mastering Patience and Market Volatility. But investing isn't just about buying and waiting. Erik didn't just invest. He immersed himself in the world of finance. He tracked market trends, studied investment strategies, and learned the importance of patience and long-term thinking. While many investors panic during price fluctuations, Erik understood a fundamental rule. Wealth is built by those who endure market volatility. Bitcoin's price wasn't a straight climb. There were crashes, corrections, and moments of uncertainty. Many early investors panicked and sold off their holdings. Erik held firm. He knew that true investors don't react emotionally to price swings. They stay the course. Chapter 5. The First Major Payoff. By 2013, Erik's decision was paying off. Bitcoin had surged, and his investment had grown to over $100,000. But instead of cashing out and spending lavishly, he reinvested. This is the essence of wealth building: reinvestment and compounding. Rather than letting short-term gains tempt him into reckless spending, he let his money work for him. His mindset was simple. If one investment could grow so much, what would happen if he kept making smart financial decisions? He was now playing a game that most adults never even enter, the game of multiplying wealth rather than simply earning and spending. Chapter 6. From Investor to Entrepreneur. With his growing capital, Erik ventured into entrepreneurship. He launched an online education startup, funding it with his Bitcoin earnings. Smart budgeting isn't just about saving. It's about using capital to create more capital. Instead of spending, he built something scalable, proving that financial success isn't just about earning money, but about deploying it strategically. Entrepreneurship brought new challenges. He had to manage expenses, optimize cash flow, and build a sustainable business model. But his investing principles applied here as well. Reinvesting in growth, making calculated risks, and staying disciplined with finances. Chapter 7. The Ultimate Investment Decision. In 2015, he faced another financial crossroads. A potential investor offered to buy his company, giving him a choice. Take $100,000 in cash, or accept 300 bitcoins. At the time, Bitcoin was trading around $200 per coin. Conventional wisdom would say, take the cash. But Eric applied an investor's mindset. He knew Bitcoin's potential and chose the 300 Bitcoin. It was a calculated risk and a testament to his ability to see beyond immediate gains. Most people would have taken the cash, looking for quick gratification. Eric understood that real wealth isn't about short-term gains, but long-term vision. His choice would soon prove to be the smartest financial move of his life. Chapter 8. Becoming a Millionaire. Before 18. By 2017, that decision had turned him into a millionaire. Bitcoin's meteoric rise meant his 300 Bitcoin, combined with earlier holdings, were worth over $1 million. He had officially won his bet before his 18th birthday. But what's more important than hitting a financial milestone? How you manage wealth once you achieve it. Sudden wealth can be dangerous. Many who strike it rich end up losing it just as fast. Eric knew that his next steps would determine his long-term success. Chapter 9. The Discipline to Keep Wealth. Unlike many who come into sudden wealth, Eric avoided the classic mistakes of reckless spending. Aside from one luxury purchase, a sports car, he stayed focused on financial discipline. He reinvested in new ventures, diversified his assets, and ensured that his fortune continued to grow. This is the difference between making money and keeping money. Building wealth is hard. Keeping it requires discipline, strategic reinvestment, and continuous learning. Eric embodied this philosophy, always looking for the next opportunity, rather than settling into comfort. Chapter 10. Lessons from Eric's Journey. So, what can you learn from Eric Finman's journey? 1. Recognize opportunities early. The biggest returns often come from emerging trends. Keep learning and stay ahead of the curve. 2. Budget with purpose. Every dollar you save or invest today has the potential to grow exponentially over time. 3. Think long-term. Investing isn't about quick wins. It's about holding strong in the face of market swings. 4. Reinvest and compound. Wealth isn't just built through earnings. It's multiplied through reinvestment. 5. Stay disciplined with wealth. The way you manage success determines whether you sustain it or lose it. Your financial future. Eric's story proves that smart financial decisions, no matter how small, can lead to extraordinary results. So what's your next move? Will you take control of your financial future today? If you found this video insightful, like, subscribe, and share for more deep dives into wealth-building strategies. And tell us in the comments, what's your most strategic financial decision so far? Until next time, stay curious, stay disciplined, and keep building your future.